Thought we had some really good questions. I bought XLF and was like, man, this chart just looks like it's ready to explode. And they're like, well, why? And then somebody asked, well, how do you choose timing? Like when you buy longer dated versus shorter dated. Um, so, for example, I bought Nvidia today for August. Well, why? Well, I was buying Nvidia for the breakouts here. We got it. Now I'm actually buying in an absorption range. Is it gonna absorb at 151, 152, or is it gonna come down to one? I don't know, but I need a little bit more time on Nvidia. Um, However, if you go back and you look, the thing to remember is always that three. So you guys know the first hit of support and or resistance is what there's about an 80-20 that it holds and or rejects depending upon what it is. So if we're coming into like Tesla today, you guys are asking me where's the cover point, where's the bounce point? Well, it was 295, right? And sure enough, we got that bounce. Well, why? Well, it's your first hit, right, on this level. So if it comes back up and then comes back down to 295 again, that'll be your second, and then puts in a lower high, that'll be your third, and that'll be your descending triangle looking like it's ready to break down. And you're going to be able to find this pattern everywhere. Um, so when I was getting into KRE over in here for some swings, yes, I have a catalyst, but it's also a chart pattern. We're flagging out. And once we get this third hit, it's when we want to start to break through. Now, it's not always going to be exactly to the T. Sometimes it'll be a little under, sometimes it'll be a little over, and you have to adjust accordingly. But you can see that's your high, right? And then you've got another high here. And ultimately, what is happening? All right, well, we hit it, one, and what is this one representing? Well, it's representing the consolidation period here where people are getting out and it's rejecting these people. Okay, one, we hit it again, two, that's the little U, break up and go, right? So, I mean, no matter no matter what chart we're playing, I'm going to be able to find that most likely. And on IONQ, right? We talked about it here. One, two. Hopefully, we're putting in a little U. We can break it out, and it'll be your three. So, when do you buy shorter dated options? Well, you can buy shorter dated options when you're getting this little U. Whenever I get that little U, that's my favorite time to get shorter dated options, right? Because you know it's going to work quickly, or you're going to trap all those people and break down, and you just need to get out. So let's see if there's anything else that we can find that would be worthy of buying, looking for this pattern that I'm not already in. Do I see QBTS? Is it still a buy? Yeah, I mean, it looks great. I think Nate's in this, right? So what do we have happening right here on QBTS, guys? Like literally, right here, right now. Well, you got this pop up from I guess the news of the closing of the offering, right? You got a hit, you have to hit, pull back. Now you're hitting this one, and it just works its way up, right? So you're hitting this general zone. So now what you would look for here on this is a higher low to be put in. Well, where's that higher low going to be put in? Ideally, you're going to be above these people, this 1491. So if you can buy something around this 1491 and risk, maybe 25, 30 cents tops, take it back to 1550, that's worth a shot, right? That's a good day trade. Now, as a swing trade, it's like, well, what's just now starting to happen? You're just now starting to break this downward trend. And so if we were to get a push up to like 16, if we were to get a push up into this area, what would that be? Well, okay, well, you're hitting this area. So that'd be your first hit on this area for that double top. And what kind of pattern would be shaping up here? Well, it would be a cup, and then you'd look for the handle, and then the handle pullback is the buy, and then the breakout would be 1, 2, handle break is 3. Does that make sense? So here, I'll give you guys a setup on QBTS. If for whatever reason QBTS does push up into this 16 range, you want to buy a pullback to this 1550 to 15, right? And what you're looking for is a cup and handle, and then this is where you would buy a shorter term option. because you're going to be looking for that handle break to push. And then you just repeat this over and over. Well, what's next? Well, here's your next high. Look for it there. Look for it here. And you just keep doing it over and over on the way up and over on the way down. Oops. Does that make sense? Any questions on this? D-Man, maybe a nice pattern on a short time frame on Amazon. Let's check it out. Yeah, so Amazon's a little bit different here, right? We've just broken out. And so we have to come back, we have to backfill and retest these areas. Are we going to get into my buy area? I don't know. If we do, I'll buy it. This is my buy area down here. If we don't, then I'll place something else. And what would something else look like? It would look like a failed breakdown that is now giving us legs to get above. So what possible pattern is being put in here? Well, it looks to me like kind of a head here, shoulder, shoulder area, right? Well, where's the neckline? Well, the majority of these VP level, of these people on this VP level is going to be right here. Let me maximize it. So if you're saying, you know what, we're not coming back into this box, and I'm willing to pay up as we break over these people, yeah, great, go for it. So what could we draw that would look exactly like what we've been drawing? Well, I would love for it to come up here and hit something here like that, and then do what? Give me a pullback right into this box level. Cup, handle, whatever you want to call it, ascending triangle. Doesn't matter. It's all the same stuff. Woodpecker pattern, right? Like whatever you want to call this stuff, it's always the same patterns that are happening over and over again. So on Amazon, here's another play. We push up and double top around this 220.80. Buy the next pullback at 220 to 219. Risk this box. So this is where I would do it. And then if you get stopped out here, buy it and it comes down into this area down here. And then what if it doesn't pull back right here? Okay, well I think you got about a 50-50, 60-40 of this breaking and going, right? So first hit's 80-20, second hit's 50-50, 60-40, third hit's gonna break. Well, if it does break here, sure, try to buy the breakout, keep a high and tight stop, but if it starts breaking back down into here, you're gonna roll over and break down below here. But if it breaks out and holds, you're really gonna rip on the next breakout. That's just usually what happens. Does that make sense? Does anybody else have any other charts they want to look at? Or does anybody, here's one for you. Somebody find me a chart that is setting up something like that right now, right? Kind of like that he did on Amazon. Because that's how you learn. It's the best way to learn it is try to see it yourself. KTOS, let's check it out. You have to explain it to me. On what you're looking at here on KTOS. So what I see here on KTOS is, right, you've tried breaking a couple times and it just hasn't been able to go. So to me that's weakness. Right? So it's like higher high, higher high. Now you got this pullback because it just couldn't go. So now you need more of an absorption level on KTOS. You got a little bit of one right here on these guys, but the bigger one is down here. So for me, if I was playing KTOS, I wouldn't buy this thing for long until it came back into this box. Or right there. Right on that gap fill. CRWV. So you guys call them out to me like, what are you looking at here? So what I see on CRWV is you got one hit down, two hits down. If you get another third hit down, you're going to break. Does that make sense? See how we're starting to try to break down here? And we're putting in this like descending triangle look. So if we get another hit here and hit here, you're breaking. Now, if it doesn't, right? If it does something like this, yeah, I'm all about playing that for sure. NVIDIA. Yeah. Yeah. So like, right, you've got NVIDIA, you're trying to come back up right here, right? You reject, you get your second hit, right? You get a little pullback, you're able to push through. And now these things are just repeating on the 1 minute chart. Hit, pullback, hit, pullback, push through. Hit, pullback, hit, pullback. Is it going to be able to do it again? And eventually what will happen is this will fail and you'll start you'll start a pullback and the pattern will start all over to the downside until it reverses. And this is all that happens. It's just continual. How about DG on a break and retest of this breakout trend line of 115? Yeah, yeah. No, I like the idea. So is DG going to be a failed breakout or is this just a retest? No, nobody knows. But what does it look like the pattern's trying to do? So we've got a couple options here. We're trying to double bottom off this retest with the lower right shoulder. And once it does something like this, then what are our choices? Once it bounces like this, let's just hypothetically say it bounces like this. What are our choices for the patterns now? Yeah, I'm on a 5 minute right now. It's harder to see on the bigger screen, but it's easier to see the VP. So if I swap it down like this, you can see the time frames up here. So if DG does something like this, what will happen is you're going to have a choice at this point. Is it going to push up and try to break out of this double bottom and break that neckline, which should give us the push to there, right? Or is it going to put in a descending triangle type look and have your third hit coming down because it needs to go lower? Nobody knows, right? We don't know. But this is how you just play these 1, 2, 3s over and over and over as we're whatever we're looking at. Now, the hard thing to have happen is the broadening formations. Those are hard when you get a breakout that fails, a breakdown that fails. That's just chop. I won't play in that. But those are patterns that do occur occasionally. If you're willing to play breakouts, then yes, DG is just back testing right now. If you're playing this as a TTM squeeze, no. Right? So again, understanding, like if you're buying this here, you shouldn't be risking the bottom of the lower Bollinger Band on whatever time frame you're playing. So if you're buying a back test here at 115, you can't risk down here at 111. That's $4 risk. However, if you're buying this as a back test and you're like, okay, I think the main VP level here that's going to hold on DG is going to be 114.30. And then you come in here and you set up a plan to say, all right, I'm going to absorb this in this range as a retest, right? I'm going to stop out below it. Then that's doable because now you're just looking for, a dollar gain to have a 1-to-1 risk reward ratio, and that would be you'd only need 50% win ratio to do that, right? Which is easily doable. Let's go see. I'm still sitting on this thing from $40. Is there any news about anything that's making these financials go? Hey guys, our sim calls are up over 100% now. This is a profit level for me. Let's see where we can get filled. Oh, the Senate passed Trump's bill. Okay. And did anybody buy this beef? I forgot to tell you, I took some profits on this. So again, right, the nice little chart, right? Looks great. Earnings winner coming into a let's see if I can scoot this up. See. Right, so you're coming into this box. So this is where the art of trading comes in. Um, it's like you hit here, right? You hit here and you hit here. So why was I buying? Trying to quantify it the best way I know how. This is the first. I view this as the first hit of the retest of this area that absorbed right here. So it's like we double bottom, we broke up, we've been in profits, people have been able to take profits, and so the people that took profits are going to rebuy it as it comes back down here. Now, if it comes back down here again, that'll be your second, in my opinion. And then if it bounces and rolls over, that'll be your third. So again, it's just kind of understanding the psychology of people and where they are. Yeah, you can consider this like value area low, 100%. Okay, is there any questions on this? If not, I'll stop this recording. Amazon, please. Yeah. Here, I'll explain this one again. So, like on Vive, if you just look at this, it's like, well, Donnie, you keep telling me three hits. Well, one, two, three, right? Well, what's different about this one? This was the art of trading. What's so hard is understanding when the chart changes and what it means. So it's like this period here. Because we were able to hold those levels, right? We this level came in and held and was able to push us up. What that means is anybody that bought in this box at these value area low levels is happy. They were happy and they made money. So as it comes back into those levels, they'd be willing to buy again, right? There's not a ton of people above you that are like super trapped, and it's not like you're setting up this horrific shelf that is coming on its way down. But you could be, right? And what would that take? Well, it would take coming back down to these levels, bouncing, trapping more people, and creating a new 1, 2, 3 that is trapping all the people here. And then if that level breaks, and you look at the daily, it's like, oh, okay, yeah, I see how we could be setting up for a 1, 2, 3 on the larger time frame of the daily. I hope that makes sense. Please share thoughts on Amazon. Yeah, what's your play on Amazon? I think Amazon looks great. I'm in Amazon for the long haul. I've got uh, calls out until next year. I've got shares, and I'm still holding shares from this massive pullback we got. Like I think Amazon's going to all time high. I don't think it's necessarily going to happen. Maybe not even this year, but I think it will. The reason I get such long calls is so that I can buy and hold. The best way to make money in the stock market is buying good companies at great prices or great companies at good prices and just holding on. I'll give you an example. How many of you guys bought Hood? How many of you guys bought Hood down here and you thought, hey, it's a great company? Well, how many of you sold at 50, 60, 75, 80, 90, right? Like it just good companies. I don't want to have to get out of my options because of time. I want to let this sucker run. If I can dig the ditch, I want to let the water flow as long as possible. I've dug the ditch. I've got free trades on these options because I've already taken partials. And if Amazon wants to go to 250, I want to be a partaker in that. Does that make sense? So that's why I go so far out. Now I will go on shorter time frames, and I did on Amazon. Well, when do I do that? When you've got a ledge and you've got a pattern building like this, and it looks like it's going to break out. So what I mean by dig the ditch is you guys see me come in here and I'll be like, all right, I'm buying, I'm selling, I'm buying, I'm selling, right? That's me digging the ditch. And the way that I've learned for me to be able to hold is I have to take a little bit of profits quickly and kind of get a lower cost basis. And so I'll give you an example on Nvidia today. What I'm trying to do is I'm trying to dig a ditch that would allow me to take Nvidia from this back test all the way to 170. That's what I'm trying to do. Now, is Nvidia going to roll over and come back down to 110? Sure, but I'm trying to dig the ditch here. I failed on the first one and succeeded on the second one. So I was trying to dig the ditch up in here, didn't work. Let's try it again here, and it's done extremely well. So now what I'll do is I'll say, all right, I'm just going to make these numbers up. I bought, let's say, 100 options. Maybe I sell 50 now here, right? And then I'll sell another 50 if it comes into here. Well, at that point, I've got a pretty wide risk where I can hold these and not lose money. So let's say I made, 30, 40, 50% on those options. Well, now I can let it go down 30, 40, 50%. It's still be okay. Does that make sense? So that's me digging the ditch. Whenever I'm digging a ditch, I'm trying to lower my cost basis so that I can mentally be okay with the pullbacks and not be scared when they pull back. And instead of seeing pullbacks as scary, I see them as opportunities to possibly buy more because I've already taken profits. Does that make sense? So we were digging ditches over in here. You guys remember right here, I put on 3.5 million in shorter dated calls on the SPY on the 7th. What do you guys think I did on this day when we shot up? I took partials. I took partials on this day. I was like, all right, here we go. Well, what did that allow me to do? Well, when it started pulling back and my P&L was shrinking, and I started losing the money that I had made. Instead of thinking, I need to close these out, I'm scared. I thought, man, I'm already in the green, right? I've got a pretty good cost basis. Let me buy some more. And this is where I told you guys, hey guys, I'm buying more. And now we're reaping the rewards. Does that make sense? And so the bad side of shorter dated calls, for me to continue the profit gain on this, you actually have to start taking the shares. So like if you bought, let's just say you bought 520 or 500 calls and they expire in 2 weeks. Well, once the 2 weeks is up, you either have to take profits or take the shares. Okay, I'm going to stop this recording.